Happy Monday, everybody. I can't believe it's the end of April already. Incredible how fast time is flying by. Today we're going to take a look at the US markets, at the dollar, at gold, inter-market analysis to figure out where the market's going, where's gold going, where's the next hot trade. It's coming up now. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Okay, so let's start off with the US stock markets, and we're looking here at the NASDAQ 100. And sometimes you just keep it simple, and that's it. Last week was a good week for the bulls. Didn't look like it on Monday, but as you can see, by the end of the week, we clearly broke the downtrend since February. We confirmed the breakout. The next zone we're looking at is about here, around 20,000 to 20,200 area. So we're bullish on tech stocks for the coming week. It's earnings season 2. That will give us kind of a black box. So, wait, you just said you're bullish for stocks. Yes, the chart setup is positive. It's bullish, clearly. As you can see, the RSI moved above 50, which means there's momentum in buying for the first time since February. But it's earnings season, so a lot of uncalculatable risks. So would I go aggressively long right now in the market? No, I would not. But what we can figure out is where's the action in the market at? And as you can see, this is the Dow Jones. It's in the tech stocks. In the Dow Jones, we haven't even reached the downtrend since February. In the NASDAQ, we've broken it already. So the action clearly in the tech stocks, but we got to be careful with earning season. We don't really know what will happen. Now, in the past week, it was fine, right? We even had bad Tesla results. Didn't harm the stock too much. That's a positive sign. Shows us that we're oversold. That would support the theory that risk is coming back into the market. Now, that would be bad for gold. Let's take a look at gold. Okay, so you're familiar with this chart. I've shown it to you before. It's the daily, right? We have the head and shoulders risk, and I'm going to switch to the hourly because you can see it better here. So this is the hourly chart since the beginning of April, and you can see very clearly the possible formation of a head and shoulders. Why do I say possible? Well, because the neckline hasn't triggered yet. When will the head and shoulders be negated? If we close above and confirm above this high of the right shoulder. So that'd be around 3,070. Now let me show you something. If we run a Fibonacci from the low of the current up move all the way to the high, you can see we're basically holding the 38.2, and at the 50, so the 50% retracement from the top of this move is running right in this zone that I have pointed out for weeks now, which is really interesting. So now we have two factors that will support the gold price around 3,200, right? And we can also see, really interesting, if we zoom this thing out, that the 31.8 hits the former high before we had the correction in April. So this is interesting. So clearly gold is losing its dynamic, and this makes sense because we see risk on in the stock market. However, we have great support, triple support, right? Around 32.20. That is the triple support. Being 50% fib, this support zone, the midpoint approximately, and the neckline from the head and shoulders. So right now, considering that we are overall in a bull market, if, and see, this is where it all comes full circle. If the dollar doesn't gain a lot of strength, which we're going to look at in a second, and the risk on in the tech stocks doesn't go crazy, then 32.20 might be it with a correction. That might be it. All right. There's a nice long swing trade considering the strong upward momentum to be had around 32.20, and then you put the stop right below here. Right? Because if we go all the way down to 32.20, tag the triple support, it holds, and the dollar keeps going down, and the risk on momentum in in the market fades, we're going to go up, and then we're going to go to 3,600, 3,750 in gold. That would be my next target from there, right? If we close below, well, then we're in a lot of trouble, because then the head and shoulders triggered. You'll hear about it everywhere by then, and then we'll go down further. But for now, let's take a look at the dollar. And what do we see with the dollar? Oh, look at this. We see stabilization, or at least it's trying to stabilize. I've been telling you this since last week. That makes sense, right? If the dollar can close over parity, right, it can be a quick move up in the dollar, and that would really hurt gold, especially considering we have risk on in the stock markets. So we basically have a wait and see. We have a wait and see in the stock markets because it's earnings season, and the earnings are really not that important. It's what do the managements say in the conference calls for the outlook. So far, that hasn't bothered the markets, which basically shows us that it's risk on. We want to party in high tech, right? We want to party with the tech stocks. We want to party with the cool kids. And that's where the action is right now. If I don't want to go all in, but if I want to take small swing trade positions, preferably after the earnings are out. So I got that off the table, that risk factor. This is where it's at in the markets. It's not an old economy. We looked at the Dow Jones. That doesn't have it, right? Gold looks like it's going to consolidate if the risk on keeps going on in the stock market and the dollar goes up. But we know 32.20 is an area. That's the area where we really, really need to pay attention. And if this area holds, starting a swing long with a tight stop, that's a pretty juicy proposition. Now let's look at 3 other commodities that I really like right now, that nobody's talking about, but you do know one because I talked about it in the last video, and that's uranium. Uranium confirmed the break of the 2025 downtrend on Friday. It confirmed the jump back into the long-term uptrend. This is looking really good. And remember, nobody is invested in uranium anymore. So any setback to around $20 in the Sprott Physical Uranium Trust, that's a buying opportunity now. Another commodity that I like that nobody is talking about right now, take a look at sugar. It has broken its short-term downtrend from April. Look at this. It moved out of the support zone with authority on Friday. There's a lot of air until we reach the downtrend, which it reached the last time it went up. Look at the last 2 times it went to the support zone. Monster up move, monster up move. Now this one will be shorter. At least we got to be careful, because once we reach around 1990, right, to 20, and we'll hit the downtrend. That's where it's going to be decided. But starting a swing trade here and then seeing what's happening at the downtrend, we break it, fantastic, we're already in. We're going to get the whole rally. If it reverses there and goes back down like it did here or here, all right, then we'll sell it with a small gain. What I also like is this. Look at this. First test of the support zone, we went all the way to the bottom. Second one, only intraday, not on the close. We mostly hung around like below the midpoint. And now we only went to the midpoint. So we're seeing higher highs in sugar that nobody's talking about right now. So those are 2 commodities that I like that you could keep an eye on and open up long swing trading positions. That's it for today. Have a great start to the week. Talk to you later. Bye-bye.